The focus of this report, which we call the Europe Plots a New Course, obviously focusing on this sort of growing transatlantic rift and the unilateral approach that the US is taking to a lot of different areas, right? As you mentioned, security, trade, being two prominent ones. So obviously, so what we're seeing in Europe is obviously there's a big urgency to increase defense expenditure. Germany has obviously announced, you've talked about that a lot, a huge program, which could amount to 20% of GDP over 12 years. Germany, AAA, has the financial flexibility. Other European member states need to step up and will step up, but they are much more fiscally constrained. So that is sort of will feed into sort of tough political choices in terms of where they prioritize expenditure, and that will obviously determine ultimately, how the credit profile develops going forward.
You note in the report that the impressive resilience of the U.S. economy provided a supportive backdrop for European business activity in the last year. We're talking now increasingly about the possibility of an economic downturn in the U.S. So to what extent, if we see a U.S. downturn, is that going to negatively impact European credit?
Yeah, I mean, this is, and obviously this potential risk of a hard landing in the U.S., we think that's, that probably is increasing, but it's still not our base case, obviously. If it were to materialize, obviously that would be, have a negative impact on Europe. But actually, more broadly, this has really been caused by, in large part, we think, by the uncertainty about the policy objectives and the duration, and how the U.S. will actually roll out their plans, particularly around trade, right? So, and actually, the key point is here that the uncertainty, we think, is actually having a bigger negative impact on confidence, investment, and growth in Europe than actually the tariffs themselves, at least under our base case announcement expectations for April the 2nd.
I wanted to ask you about some of the ratings implications from all the heavy news flow we've heard in Europe recently. This whole Rearm Europe plan looks all like it's blue sky, big defence spending to ensure security here in Europe, defence plans to infrastructure too from the Germans. Is this all positive from a ratings perspective, or do you see negative implications at some point around execution?
Well, I mean, obviously we've had the big announcement, the bazookas in Germany, and actually the challenge will be to, in terms of the rollouts, and to what extent the expenditure will really benefit Europe, the European economy, or to what extent, if you're increasing military expenditure, actually a lot of that will come in from the US, imports from the US. But actually, we think this is a positive for European corporate credit, certainly. I mean, the banking system is well capitalized, so well able to support growth, for corporate sectors. Obviously, there are a few sectors where we don't see the credit quality being quite as strong, and really those are sort of autos. Is obviously, but again, it largely comes back to tariffs. Perhaps the whole energy transition, the challenge that European OEMs have in sales in China, and ultimately, one of the key concerns that we're watching carefully is how supply chains will adapt in this new environment. So, from a nitty-gritty credit point of view, right, we are looking at supply chains and how they can deal with this environment going forward, and that's a key area.
What about the sovereigns?